The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
So joining us now to discuss the crypto markets is none other than CoinDesk Indices Managing Director, Jodie Gunzberg. Good morning, Jodie.
Good morning.
Good to see you this morning. And you know, this is, of course, a crazy time right now in crypto because we're kind of, as I said in the beginning, we're breaking the narrative, this sort of thing that crypto is moving lockstep with tech stocks. And it seems to have diverged. And one of the interesting divergences that have happened is in the DeFi sector. We're seeing these DeFi tokens rally. And it's kind of an interesting thing because this is happening at a time when interest rates are marching up, they're marching higher. And one would think that DeFi would have a tough time in a higher interest rate environment because they're competing against risk-free rate. So what exactly is going on?
I think that as we just heard, there's this need for industry assignment, even in determining what are securities, what are currencies or commodities. And with this, what we're noticing is that there's divergence in performance despite what I think is a pretty spectacular comeback given the environment of very high inflation, aggressive rate hikes, and again, this combination, this toxic combination, I would even call it, of leverage and speculation in the crypto market that seemed to set off like a crypto global financial crisis and LTCM, other debacles that have happened from it. But the divergence in performance now by the industry assignment of all of these digital assets that we have in our CoinDesk DAX system, the digital asset classification standard, is that the smart contract platform sector that supports DeFi fell the most in that week when May's CPI was announced in June, followed by that 75 basis point rate hike. And when that happened, the sector fell over 40%, and that snapback alone created some performance that we haven't seen in a very long time. Some of the biggest assets in the smart contract platform sector and DeFi were up over 50%. Ether is up like about 60% month to date. Uniswap, which is up almost 90% since that rate hike in June, is huge. So I think that we're seeing big rebounds, but not all the same across the entire spectrum.
You know, you brought up the DAX, and I think you're the DAX person to talk to, and I think this is something we kind of have to explain to people. It's the digital asset classification standards that CoinDesk Indices has developed. So can you kind of explain that and how it's broken up? You know, you have these 6 major sectors, and so how are these broken up, and why would you break up the industry this way, and what is it overall? Tell us, particularly as you know, you kind of alluded to it with your answer just now, but just sort of go into a little bit more about what does that mean overall, and how people should look at the markets.
Just like in traditional markets and equities, there's different sectors. We talk about them all the time. Technology, which you alluded to before, finance, energy, utilities, they all have different businesses. And as digital assets have grown so much, the use cases vary. So something like Bitcoin, that's a currency, is not the same as an NFT that's an artwork or a gaming that's in the metaverse, you know, Decentraland, something like that. And so what we do is we've organized and defined the digital asset space where we're taking the top 500 assets and assigning them to industries. Currently, we've got 36 industries, we've got 23 industry groups, and we have 6 sectors. So we are taking the time to assign each asset to an industry by its use case, and then the industry gets assigned to an industry group, and an industry group gets assigned to a sector. And as we see, there's this now very wide dispersion between the performance of sectors. And this creates trading opportunities for people looking for where they can generate alpha. And it also provides risk management. We see very consistently low correlation in digitization. We saw a drawdown that was only about half from culture and entertainment as much it was in smart contract platform. Obviously, culture and entertainment like artwork, NFTs, metaverse is not as sensitive to interest rates and inflation as art is. So we've seen a wide divergence, and this is why sectors are so important, is so that investors can start positioning their portfolios appropriate to what they think is coming next.
So a big question on everyone's mind is, has the cryptocurrency market bottomed out? And based on all of this data, do you have any further insights on to whether or not that has happened?
That's a great question. And it's difficult to say, maybe even it has bottomed temporarily. What I've noticed is that the gains that we've seen in just over a week rarely happen. Especially in Ether, gained over 50% after that June CPI was announced. That was huge. The last time we saw a gain that big, almost 18 months ago, ETH went from 1,500 to over 4,000. And while some of that might have been moved by the merge, I think that the reaction to inflation helped and could be catalyst for more upside. So if we get inflation and rate hikes that are in line at least with expectations, I think that that could be the bottom for crypto. However, if we see any big surprises, more aggressive rate hikes than we expect, higher inflation than we expect, then or a rise in the dollar that we don't expect, then I think there could be more downside. But overall, it looks a lot like a bottom, and even moderately rising rates and moderately accelerating inflation, those are actually very good environments for crypto. So we hope to see that.
What sectors would get most affected then? You know, obviously, as we said, the interest rates are going up. So what sectors do you think will be most affected? And you said least affected, of course, would be cultural. So Decentraland, for instance, would not necessarily suffer the same kind of thing as some of these other sectors, correct?
Yeah, so I think digitization would be the least affected. And other sectors like culture and entertainment and computing would also be far less impacted by the macroeconomics, the inflation, the dollar, and the interest rates. Most affected would be smart contract platforms that support all of DeFi. DeFi would, as a derivative of smart contract platforms, would also be impacted, and currencies after that.